Hello students, how are you all? Welcome. Today we are going to discuss November 2023 related amendments. There are only 3 amendments and those are also minor amendments. So whatever that you are using the book for May 2023 related amendments, which are the major amendments, you can use the same book for November 2023 also. There are no major changes. Okay, so you need not buy any new book, and that's why I'm explaining directly from the institute material only these amendments. These amendments are very minor one. Okay, we are going to cover as fast as possible these amendments. Now we will see the amendment number 1, which is related to section 139 AA, read with rule 114 AAA. So what is this amendment is about? Before going to the amendment for November 2023, let me explain what is section 139 AA. Section 139 AA is a simple provision. It says that you need to link your Aadhaar and permanent account number by 31st March 2022. You need to link your permanent account number and Aadhaar number by 31st March 2022. If you have not done, then your permanent account number will becomes inoperative. Inoperative in the sense invalid. You won't able to file your return. You won't able to communicate with the department with your permanent account number after 31st March 2022 if you don't link PAN and Aadhaar. This is what is section 139 AA is about. So what if SSC has done it after 31st March 2022? Yes, he can do so. After 31st March 2022, if we link the PAN with the Aadhaar, then department is levy a additional fees. What is that additional fees? If he is able to link his PAN with the Aadhaar on or before 30th June 2022, the fees will be 500. After 30th June 2022, the fees will be 1000 rupees. This additional fees was provided in section 234H. Additional fees provided in section 234H. This is what is section 139 AA. So when I say that inoperative should have additional consequences also. Without that, by paying the simple fee, these timelines will get delayed and they won't link the PAN with the Aadhaar. So they have introduced a new rule called Rule 114 AAA. 114 This rule contains the procedural aspects of how this inoperative will become effective. If once it is inoperative, how it becomes operative, and what are the consequences in addition to the paying of these additional fees. What are the additional consequences of this non-linking the PAN with the Aadhaar number that is provided in section Rule 114 AAA. Now we will see the clauses of Rule 114 AAA. Rule 114 AAA, the clause number 1, sub-rule 1, says that date from which PAN will become inoperative. Date from which PAN will become inoperative from 1st April 2022, the permanent account number will be inoperative. When and how the inoperative PAN will be operative? The PAN will become again operative if he paid the fees as provided in section 234H. If he's and he intimated his Aadhaar number to the department, then department will take max to max 30 days to activate his permanent account number. Okay, this is after 31st March 2002 if he links this PAN with the Aadhaar. Then sub rule number 3. Sub rule number 3 is very important. Sub rule number 3 is only there is an amendment here. So further consequences of failure to intimate the Aadhaar number. What are the further consequences? Paying the additional fees is fine, but there should be an additional consequences also, so that this becomes SSC will become more disciplined to link his PAN versus Aadhaar. PAN and Aadhaar. Okay, what are the further consequences? Further consequences, the first thing is he won't get any refund. If he is eligible for a refund based on his, if it is due from the department, from that date he don't get any refund from the department. Not only refund, if there is a due from the department will pay interest also, right, on the refund amount. That interest also he won't get. Refund he won't get, interest on the refund also he won't get. Not only this, so TDS and TCS provisions. If you see TDS and TCS provisions, there is a 206 AA as well as 206 CC. This provision says that if the PAN is invalid, then higher tax rate of 20% will be levied. So as this from 1st April 2022, whoever is not linked to the PAN and Aadhaar, the PAN is invalid, right? For that invalid, 20% tax reduction will be applicable. So these are the four consequences. One is refund and interest on that refund. Third is TDS provision. TDS higher rate of 20% is applicable, and TCS provision higher rate of 20% is applicable. These are the consequences of not linking the PAN and Aadhaar. Okay, now we'll move on. We'll come to the amendment now. This is all are already covered in your May 2023 also. What is the amendment now? CBDT earlier said that these consequences, even though they have given a timeline of 31st March 22, they said that these consequences, especially in the clause 3, the consequences will be applicable only from, just a minute, only from 1st April 2023. These are applicable from the 1st April 2023, not from immediately 1st April 2022. These are applicable from 1st April 2023. They have given a clarification on this. This clause, particularly clause number 3. Now they extended the timeline to 1st July 2023. This is the November 2023 amendment. This is the only November 2023 amendment. They just extended the timeline by further 3 months. That's the amendment. That was provided in circular number 3 2023. They said that instead of 1st April, you read it as a 1st July. 1st July 2023 is the new timeline to make these consequences as provided, further consequences as provided in the clause sub-rule 3 of rule 114 AAA. Okay, and additional fee 1000 will continue to apply if the late linking is there. Then in some cases central government by notification said that this particular people need not get the Aadhaar card, Aadhaar number. So for them this rule is not applicable. This rule is exempted. This is all about the amendment number 1. Amendment number 1. Now we'll move on to the amendment number 2. Now we will see the amendment number 2. Amendment number 2 is relating to the 269 ST, section 269 ST. What is section 269 ST? 269 ST says that no person shall receive an amount of 2 lakh or more. 2 lakh or more if he receives other than by account payee check, account payee draft, or through ECS system, except by these three modes. ECS means what? NEFT, RTGS or IMPS, any mode of payment, electronic clearing system, that is also covered here. So account pay chip, account pay draft or ECS mode, except by these modes. If any person receives an amount, if that amount is 2 lakh or more, then these provisions are applicable. Then he has to pay a penalty which is equal to the amount of the receipt that he made. If he receives amount of 2,50,000, 2,50,000 will be levied penalty. Okay, they provided total 3 clauses here. The clause number 1 says aggregate from a person in a day. So it need not be a single payment. Even if you receive an amount of 50,000 in 4 installments also was covered under section 269 ST. If you receive even 2 lakhs in 4 installments in a single day, then also this provision will be attracted. You need to make a payment of penalty which is equal to the amount of receipt. That is clause number A. Clause number B. Clause number B says in respect of a single transaction. So if you receive more than 2 lakhs or 2 lakhs covered under this provision, again you need to make the penalty. Either aggregate or a single payment covered under this provision. The point number C. Point number C says in respect of transaction relating to one event or occasion from a person. If I just give you an example, for example, there is a workshop. There is a seminar, or there is a function, marriage function, any other function. So if this happens for 3 days, so that is an event, that is a occasion. So for example, if this happens for 3 days, for example, then if the particular organizer, whoever is organizer, if they receives a payment in cash, even in in these total 3 days, if he receives an amount which is above 2 lakhs, then also these provisions will be attracted. Okay, so for example, if he receives per day, if he receives around 1 lakh per day, total becomes 3 lakhs, then also these provisions will be applicable. That event or occasion is the point of trigger to compute the aggregate payments. This is the provision. Now what is happening is this is impacting the cooperative societies business. Cooperative societies, there will be a cooperative society, there are distributors. So usually these cooperative societies engages in the benefit of their members. So benefit of that members in the sense, for example, if the cooperative society is doing a dairy farming, supplying of milk, etc. So there will be a distributor at the remote place, mostly in villages, and there's a cooperative society will be there. So there will be an agreement between this cooperative society as well as the distributor. So to this distributor is started making the payment to the cooperative society every time when he delivers some material to them. So then also this event triggers and these provisions are applicable, because the plain reading of the clause number C, it is applicable. That's an agreement is an event or a occasion started, then aggregate of all the payments is crossing 2 lakhs, and cooperative society, in the hands of cooperative society, these receipts are becoming liable for the penalty. This is the genuine hardship faced by the cooperative society. Then this circular says that this clause number 3 is not applicable in case of cooperative society. They have given a circular accordingly. Circular number 25 2022, they issued a circular saying that clause number 3 of section 269 ST is not applicable to the cooperative societies. This is the amendment applicable for the November 2023. Remaining provision is as it is, only clarification they have given in these two paras relation to the cooperative society. This is the amendment. I hope you understand this. Amendment number 3 is related to the statement of financial transaction, that is SFT. So every SSC who is a specified person was notified separately. Those specified persons, based on the specified limits as provided in the Income Tax Act, those people needs to file a statement of financial transactions SFT with the department. Basically, assessing officer will use this statement as a to cross check what is provided in the written and what is available in this report, to cross check the transactions of the SSC. For that purpose, this particular statement will be used. So one of the reporting segment under this provision is relating to the account or deposit holders relating interest relating to the deposits in the bank. So what they said is, earlier they issued a notification in 2021 saying that if any account or deposit holder aggregate of total accounts, like whether he is having a savings, FD, or other accounts, except the current account. Current account doesn't have any interest, so except the other accounts. So number of accounts. If the total interest at a deposit holder crosses 5,000 rupees, banking companies needs to specify this particular deposit holder's details to the income tax department, that they have to provide as part of the statement of financial transaction. This notification issued in 2021. Now, in the recent time, on 5th January 2023, they issued a revised notification saying that there is no limit now. They actually give a nullifying effect of this 2021 notification. They said that any deposit holders, if the interest income for all the deposits that he has, even if it is more than zero, that is even if it is single rupee, then also that's a reportable segment, reportable issue, transaction for the banking companies. So if you see here, CBDT has by this notification modified the set guidelines, mentioning that the information is to be reported for all account or deposit holders where any interest exceeds zero per account in the financial year, excluding the Jan Dhan accounts. So if even if you are added only 1 rupee, 10 rupees, 100 rupees also, the same will get reported. Same will get reported. They extended the statement of financial transaction scope with this. The 5,000 limit was gone. Okay, and excluding Jan Dhan account. Jan Dhan accounts, why they excluded? This is the Jan Dhan accounts is a central government scheme, and only small petty amounts will be deposited into these accounts of the poor families. So that's why they have excluded these Jan Dhan accounts from under the scope of the statement of financial transaction. The simple amendment, this is section 285 BA. This is all about your November 2023 amendments. Only 3 amendments are there. Those are also minor amendments. I can expect a MCQ question from this, not a descriptive question. Okay, this is all what about the amendments. I hope you enjoyed this video. Thank you. Signing off. Bye.